You sold Lam, which surprised me. You talked about it a lot from the chip equipment space. Why did you sell this name?
Because they do 30 to 50% business in China. And with tariffs coming, I just think that that's going to be an overhang. I don't think it's going to be disastrous, but when I was buying this, I've cited this many, many times. When I was buying this 3 years ago, the stock was trading at 14 times forward estimates. It is totally re-rated. It got as high as 25 times. It's now at 22 times. It's not really expensive if you believe in wafer fab equipment recovering, but I don't think that's going to happen until next year, and I think you do have this overhang with China. And I just wanted to use the cash to buy some other names. Part of that, I bought Accenture, and we'll talk about that later if you want. But part of that, I also bought other things as well.
Well, you bought more Gap.
Yeah.
You bought more Crowd.
Yeah. Well, Crowd was down. I mean, that was just silly on Friday, down 6%. I mean, that quarter was fabulous. I mean, revenues and earnings are growing 30 to 40%. Subscription revenues 31%. And we talk about retention rates because it's important, because everybody thinks that the software glitch that happened in the summer really is going to be permanently damaging for the company. The retention rate was 97%. So to me, that was a no-brainer just to add more to it. And it's quite big now. And also, by the way, part of the reaction, I think, is because it was up 35% headed into the print, right? But it's still down from its highs, about 7%. So I still think that's attractive. The Gap is, to me, like a no-brainer. Richard Dixon is proving himself as a valuable CEO. He fixed Mattel, Barbie at Mattel. Now he has been there for about a year and a half at the Gap. He has a new CEO of Old Navy, new CEO of Athleta. Athleta grew 5% sequentially. That's huge. They are taking massive share from the big names out there, and we all know who they are. In addition, I think the free cash flow at $500 million year to date gives them a little bit more breathing room, and gross margins and operating margins have actually been expanding. Operating margins the best in 7 years. Stock trades at 13 times with a 3% yield.
You sold GE Healthcare, which, you know, the fact that you're selling anything GE related is newsworthy because you've been, I think, geez, I feel like the biggest supporter of what they've done at this entire network. Anybody involved in this network of what GE and Larry Culp have done in splitting off these businesses. Why are you selling this one here?
It's been a long and winding road with GE, for sure. So GE has outperformed healthcare since they spun out from GE. That's up about 37%. The XLV is only up about 11%. They've done a lot of good things. I think there's still more margin expansion. They, too, have a lot of exposure in China, and that has been a headwind for all of the medical device companies. Just look at J&J and listen to what they're having to say, and a lot of the companies over there. So I took that money and I put more money into Eli Lilly because that stock is down 16% from its highs. They are growing like a weed, and it's not just diabetes and weight loss. It's also their oncology, neurology. Their franchises are growing without the weight loss and diabetes, something like 30%, right? And so when you look at what they have in the pipeline, in addition to these other faster growing drugs, I think it makes a lot of sense to buy on the weakness as the best in class. And I think GLP-1s we're just in the beginning stages. We're in the second inning in this thing.